The government has called for the implementation of cost-saving measures among government-related entities to help fund some of the additional expenses related to subsidies, according to a circular by the Treasury. The July 14th circular entitled Guidelines on Public Expenditure Savings was issued by Treasury Secretary-General Datuk Sri Asri Hamidon. In the 9-page document, the MOF said savings will be made on operating allocations, excluding emoluments, to partly cover the increase in subsidies, in line with the government's decision to increase aid and subsidy expenditure for the welfare of the people. Asri said, therefore, ministries, departments, agencies need to restructure their allocations and propose management allocation savings for the MOF to achieve a target of at least 5% savings from the remaining operating allocation for the year 2022. The MOF will finalize and issue a restraining warrant to inform the amount of reduced allocation. This directive comes as the expenditure for assistance and subsidies are projected to reach 77.7 billion ringgit in 2022, exceeding the 31 billion ringgit allocation approved in the 2022 budget, according to ASRI. The higher expenditure is amid the implementation of subsidies for essential goods and price controls aimed at reducing the impact of global inflation on the country and the people. The circular outlines several areas where savings can be made, including in operating expenses, appointments, rearrangement of organisation, establishment of statutory bodies, CLBG, overtime allowance, outstation exchange, domestic and overseas accommodation, acquisition of new assets, event organisation, advertising, outsourcing and development expenditures. ASRI said controlling officers must review existing programs or activities to identify possible savings, which can be used to accommodate new programs or activities, trading them off against those that are no longer relevant or deemed ineffective. He emphasises that existing programs or activities must be reviewed before new ones are submitted to the Cabinet or MOF for consideration. Digicom saw its net profit for the second quarter dropped by 21% to 220 million due to cukai makmur and increased net finance costs due to non-cash hedge accounting. As a result of the prosperity tax, the group's effective tax rate for the current quarter came in at 39.2%. Quarterly revenue declined by 4.9% year-on-year to 1.54 billion from 1.62 billion previously. The telco also declared its second interim tax-exempt dividend of 2.8 cents per share. For the first half of FY22, Digi saw its earnings decline by 16.3% to 456.2 million, while revenue dipped by 3.4% to 3.06 billion from 3.17 billion previously. In a separate statement, Digi said it continued to invest in strengthening its network quality and availability, with capital expenditure amounting to 175 million, or capex to total revenue ratio of 11.4% for the quarter. Postpaid subscribers grew for the 7th consecutive quarter, with 183,000 year-on-year net additions, while prepaid subscribers saw 96,000 net additions year-on-year. Blended mobile average revenue per user remained resilient at 42 ringgit. Looking ahead, Digi said the first half of the year saw robust domestic economic growth, largely driven by rising demand as economic activities normalized with the easing of containment measures. The telco said that it would continue to accelerate the modernization and digitalization of internal processes, increase investments in network improvements, and deepening responsible business commitments. Pharmaniaga says the current pharmaceutical product shortage will normalise by end July to end August this year as the industry ramps up production, while the government has announced that it will distribute its stockpile of medicines to private clinics and hospitals to help ease the shortage. Group Deputy Managing Director Muhammad Iqbal Abdul Rahman says the industry was unable to address the shortage promptly as production could not be ramped up immediately due to the need to procure additional raw materials. While Muhammad Iqbal acknowledged that supply chain disruptions were also a contributing factor to the shortage, he says the main reason was elevated demand of pharmaceutical products, which he notes was above pre-COVID-19 levels. Meanwhile, in reference to Pharmaniaga's meeting with the Health Ministry and the Malaysian Medical Association in regards to the shortage, Muhammad Iqbal said the parties discussed educating the public to avoid panic buying, as Omicron-induced panic buying also compounded the issue. The Social Security Organisation has suspended 423 million in hiring incentive payments for Putrajaya. This follows the discovery of misappropriation and false claims involving employers and training providers. Its CEO, Datuk Sri Dr. Muhammad Azman Aziz Mohammed, said the suspension was made based on data analysis conducted by its Anti-Fraud, Ethics and Integrity Unit. Investigations are being conducted by the agency and the Malaysian Anti-Corruption Commission. He said Sasco views the matter seriously as the aid, first announced by the government in 2020 under the National Economic Recovery Plan, is aimed at easing the burden of those who are truly in need. He added that the agency always emphasizes integrity, honesty and trust in distributing the government's financial assistance because it involves public funds. So far, Sasco has disbursed payments of 2.34 billion to 45,379 employers for the recruitment of 327,789 job seekers under the Putrajaya program. Muhammad Azman called on employers who have misappropriated funds or submitted false claims under the scheme to come forward and make voluntary repayments or contact Sasco to resolve this issue before any action is taken. Hexatech Technology Solutions, formerly known as Complete Logistics Services, controlling shareholder Dato' Eddie Ong Chu Meng has bought over the company's entire stake of 14.94% in Classic Scenic. Ong purchased the stake, comprising 36 million Classic Scenic shares, via direct business transactions on July 14th, according to Hexatech's boss filing. Ong is now the largest shareholder of Classic Scenic with a total stake of 77.26 million shares or 32.06%, while Hexatech has ceased to be a substantial shareholder in the wooden picture frame manufacturer. Hexatech had emerged as a substantial shareholder of Classic Scenic in March last year after acquiring 18 million shares for RM1.63 a share or 29.3 million ringgit. Shares in Classic Scenic closed 1 cent or 1.49% higher at 68 cent, while Hexatech rose 6 cent to RM3.85.